Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the markets relatively quiet, which is generally the case on pre-NFP day. Saw gold dip to 1296 and then pop back up into this 1303, which is right in the middle of that range. Someone had asked me about that yesterday on Twitter, and I said that we're basically just going to trade between this 1301.50 and 1304.30. And there's already been a wild day in gold, so finally in Europe they drip back a little bit and pop back into the range. And we know the dollar's been under pressure, obviously because the market does not want Trump to win the presidency. The dollar is up from a 4-week low on Friday ahead of U.S. non-farm payrolls report. Later in the day, it was on track for its worst week in 12, pressured by worries that Donald Trump could win next week's U.S. presidential election. The greenback has fallen 1.2% this week against a basket of major currencies, as Democrat Hillary Clinton's lead over Republican Trump in polls has dwindled following the reemergence of a controversy over a private email server. The U.S. currency had hit a 9-month high last week as investors bet that the Federal Reserve would hike interest rates this year. But a Trump victory is seen delaying that hike. Clinton is viewed as a candidate of the status quo, while much uncertainty surrounds Trump's stance on key issues including foreign policy, trade, and the economy. No doubt investors will take a cautious stance today, fearful of fresh polls, said ING currency strategist Chris Turner. Where macro does play a role in today's proceedings, we believe it should be dollar positive. Economists polled by Reuters forecast non-farm payrolls to have risen by 175,000 in October for 156 in September, and data due at 12:30 GMT. And that upbeat jobs report is expected to bolster bets on a December rate hike, which would typically push U.S. yields higher and support the greenback. Turner said it would take a headline number of below 75,000 to seriously challenge the market's conviction of a Fed hike in December, and therefore to knock the dollar. But politics have trumped economics and foreign exchange markets in recent weeks. Investors are focused on the November 8th election and paid scant attention to what normally be key events, such as the Fed's policy decision earlier this week. The market is likely to agree to strong payrolls report with a straightforward enough response and bid the dollar higher, said Junichi Ishikawa, senior FX strategist and IG Securities in Tokyo. But the rise could quickly fade amid the Trump risk lows. And this is exactly how I believe it's going to play out. I think that the NP will be stronger. I don't have a real good take. I mean, last month, same thing. I didn't have a good take, but I thought it would be a little bit stronger. And it came in weaker. And same thing, I don't have a real good take, although I would think it would come in stronger. So I think you would see a dollar reaction to the upside. But then I would think that that would quickly be faded in because of the worries about, the election coming up. And people just don't want to have, they're really paranoid and risk ahead of that. Any rise in the dollar right now will provide an opportunity for participants who have been caught long on the currency and want to square the positions, Ishikawa added. The dollar is flat at 103.08 yen. having struck a 1-month low of 102.55 yen on Thursday. And it's fallen 1.6% this week against Japanese currency, with the yen and other perceived safe havens such as the Swiss franc having benefited from the worries about Trump. We're going to the sterling. Sterling surged to a 4-week high on Thursday after England's High Court ruled that the government needed parliamentary approval to trigger Brexit and the Bank of England scrapped plans to cut interest rates. The court ruling offered hope to markets worried that PMA's cabinet is set on an economically disruptive hard Brexit, with investors reckoning lawmakers, a majority of whom supported the stay in the EU in June's referendum, will push for Britain to keep access to Europe's single market. The government said it would appeal the judgment at a Supreme Court hearing set for early December. But Deutsche Bank told clients that even if it wins its appeal, lawmakers had been emboldened, and that this has been is a base case scenario, was therefore now for Britain to hold a parliamentary election next year. Sterling climbed as much as 1.5% to hit 29.94. As you know, I tweeted that out. 29.94 is the 38% of the range of 1906 to 34.48. It's strongest since October the 7th, the day of a flash crash, briefly said it plunging 10% in a matter of minutes. It eased back to 24.40, but that's still left over 1% up on the day and on track for its best week in 8 months, after more than 2% climb. Shares in European banks, another big source of concern in the Brexit process, gained 1.1%. While UK mid-caps, more geared to the domestic economy than their blue chip peers, jumped 0.7, significantly outperforming the more globally focused FTSE. The daily spread between the two indexes briefly hit its highest since 2009. While the ruling may be reversed when appealed at the start of December, the decision does offer hope to Remainers, said Oanda market analyst Greg Earlham. In the best case scenario, it won't pass through the Parliament, and the Brexit referendum will have been for nothing. That is still unlikely at this stage, as the political backlash could be extreme, but still the ruling does offer hope, and that is why we've seen sterling spike. Other analysts said the impact of the court decision would be more limited, and many said lawmakers were unlikely to block the formal invocation of Article 50 of the EU Constitution. Japanese Bank Nomura last week laid out research that showed that while 74% of members of Parliament known to have viewed supported remaining in the EU before the referendum, 61% of their constituencies voted in favor of leaving. It's hard to ignore that 52% of the country voted to leave EU, they said. It's even harder when you're an MP who at some point will stand for re-election, especially when the 61% of parliamentary constituencies voted to leave. Several traders also said the pound's bounce looked like a short-term correction to falls of the past 4.5 months, which have knocked almost a fifth of its value. The BOE report against the euro, sterling rose as much as 1.9% to hit a 4-week high of 88.59.5 pence, having already surged on the High Court ruling, as well as the data showing a growth spurt in Britain's dominant services sector. Sterling was further boosted by the BOE's latest inflation report, in which it said chances of a rate hike had risen since its last quarterly report. The BOE cut rates to a record low of 0.25% in August, and said it would have cut again in order to deal with the economic fallout of the Brexit vote, but sterling's plunge since then has inflation expectations soaring. It certainly looks like policymakers are becoming more concerned about the impact of sterling's weakness on the outlook for inflation, said Lee Hardman, analyst with Bank of Tokyo Mitsubishi in London. They have signaled that they could raise rates if it's not the core scenario relative to the previous meetings. So we'll go into the charts, and we'll also take a look at what's on tap today. Glenn says NFP print how important is it for a December hike? The December hike's already going to happen. The only way that the December hike didn't happen then, if Trump were to be elected, it's really going to scare the market and send the markets tumbling because of his trade policies. And under that circumstance, that could definitely then delay the hike. And they may not do that if you saw the markets really take a hitter, and that's what's going to happen if he were to win. Regardless of your political leanings, that's just the reality. You see what I'm saying? The fact that Trump's leading the polls is why you've seen the dollar tank. I mean, okay, let's tell it like it is. You've seen in a short fall, though, from those extreme overbought levels. You've seen it tank. You've seen the stock market really be roiled. I don't want to say tank, but it's it wasn't that long ago. We were trading in the mid and upper 2130s. And here we are nearly 50 handles lower. That's all on Trump. I'm just saying that's nobody, they know what they're getting if they get this guy. And so if he would be elected, you're going to see gold rally hard towards 1400, probably exceed 1400. You're going to see the S&Ps probably sell off down to about 20 and a quarter easily. And that's just for starters. So the poll is for 175. I think they'll do better than that. Obviously, like the story was saying, if we get something like north of 200, that basically solidifies the rate cut expectations. If it wasn't for Trump leading the polls, and like I said, it's already basically a done deal, and then you see the dollar, well, the dollar wouldn't even have pulled back. But that's where we are right now, and people are really paring in their risk bets. Manufacturing payrolls were down 5,000. And this is can weigh, because we've seen construction reports just continue to be really weaker. And wage gains are expected to come up 0.3. This all will have a certain factor, but not the kind of factor, because what happens is, excuse me, you have that overhang in the market of the concern with Trump. So if we were to get something like, 196, and let's say this came 0.3, the dollar would be just rallying, Treasury would be selling off. But the idea with Trump, it's just, that's just going to have a big overhang on the market. That's why I've been saying that I think the markets will move. I just don't think it'll be as impacted as largely. We'd have to have a pretty big Buffalo number like 225, 235K in order, and the dollar would strengthen, but even then it would pull back from any kind of rallies. Amanda says good morning. Also, good morning to me. So that was, and good morning, Glenn. So that's the take on that. And usually we start out really slow on FP Day, and we're trying to do a bunch of analysis in bigger scope. I don't think that's the case, because I think it's written on the wall. We already know what's going to happen, essentially. So even if you get good news, it's going to be faded, because the Trump thing is overhanging the market. And that's what the story, and that's exactly what the Reuters story was saying too. It's just going to be, it's an overhang. It's just, on the market, no matter what, that's just going to be the driving concern. So I don't think we're moving into any big ranges at all. And anything that comes in from a good news perspective. Well, this isn't a feed. That's, Glenn was asking where I get that. That's Reuters. And I use that for news service. I don't go by just the news, although I'll use it to get kind of like a heads up on stuff that's going to be happening. I'm still trading primarily just technicals, but I will go in and look at the news and see what's going on. Obviously, like on a day like this, it's all about the NFP. So generally, you're going to see the market's really dead and quiet, which usually is generally why I sleep in an extra hour on NFP day. Now, we did see a quick dip in gold, but then again, gold's had a pretty big volatile, last 3 days. From an electoral college standpoint, Clinton's still in the lead. But like I said, could Trump win? Yeah, he'd have to run the table, but he could do it. But I think that, like that blog post I put, that tempers you can temper those concerns of the market. I just think, like I said, when it comes to the SPOOs, we're at very key support. Well, Glenn says unemployment is more important than NFP. Well, and unemployment is the NFP. It's a non-farm payrolls report. As we go from month to month, these NFP reports, they either strengthen or lessen the case whether, the Fed's going to go on and stay on the path to raise rates, or does it reduce the path? So if we had a real bad weak number, then that would call into question whether they'd be raised in December. And the euro continues to stay strong. I mean, I think that the big bets that were placed on the way down, and they were huge bets. I'm saying is, because everybody then was talking about 105. I still stuck to the guns. I was saying 107. I know that on the way down here, everybody was talking about 105. It certainly looked like it was heading that way with the ferocity of the move lower. I mean, you couldn't even get a bid. And I don't think people have bailed out of those positions, but we've really had a pretty good rally. I think that obviously if Clinton wins, you could be back making new lows in a very short amount of time. In a couple of weeks or so, you could be, all things being equal, you get a decent NFP. But we'll have to see. I just don't think that people are going to be paying that much of it. I think they will pay attention to the guts of the number. See, the hike is already priced in. So if you were to see 0.3 in wage gains and a decent number, all it's doing is affirming what everybody already expects. That's why I don't think it makes that big of a deal. And also, the overhang of the Trump concern is what's weighing. So that's what I'm saying. I just don't see it having as big of an impact. It can have an impact, but if we get a decent NFP, they're going to sell the dollar on the rally. That's just the way it's going to be. Yeah, Jack says also maybe someone dollar Swiss. I was looking at 97.02 out at 97.50 and keeping light till after NFP, then light again into election. Anyways, I'm looking at 96.20, 40 the zone as really nice looking levels. Thought maybe if you may, cover it. Glenn says non-farm payrolls measures the change. I know what non-farm payrolls is, Glenn. I really don't need you to go on and to attempt to school me. I know what the unemployment rate is. I know what the U9 is. Seriously, don't try and school me on this stuff. You've got to be freaking kidding me. You're new here. We usually break this down to the freaking iota. Anybody that's been on this webinar knows that. I'm saying is the data's not going to make as much of a big difference as time. The NFP, when people say NFP, apparently you don't know. When they say the NFP, they generally mean in the totality of it, okay? The unemployment rate, the non-farm jobs, the manufactured jobs gain or loss, and also the wage gains. So when people say NFP, they're not just talking about just the rate. They're talking about in totality, the entire report. If you look across Twitter, whatever, everybody's going to be saying the NFP. If you look about the news wires, everybody's going to be saying the NFP. They're not talking about just the rate specifically or those jobs. It's the report in totality. The jobs, the wage gains, manufacturing gains, government job gains. So I think, like I said, any rallies back here towards this 10, we can dip lower, but any rallies back here probably going to go and be bought. And I think, like I said, if you look at the S&Ps, that's why you're seeing a lot of people. And we'll go into that. And I did the blog post. And we'll go straight into the SPOOs. So you can see here in the SPOOs, we were trading in this very nice predictable range. And that's what I'm saying. People ask me, where do you come up with the zones? Are you color them in? Because I came from coloring them in because visually you can see the market a lot clearer. I mean, if you just put the lines in, support lines or whatever, and you're just like, you're trying to look at it. But when you look at this thing, you see, wow, when I look at that, I can see what's really kind of going on. That's why I color in these zones, you see? So it doesn't, as I mentioned before, you can see how the market moves well within the zone. It breaks out so that once you break out of the zone, you look like it's blue skies ahead, blowing and going. And as the market sells off, for whatever reason is, you see here, it stops here at the zone. Because now that's support. It bounces back up, and if it loses and falls into the zone, you usually see it move closer down to the 50%. We discussed that just the other day. So we make another run up. As we come down here, we fall back in the zone. And notice how they take out the low by just a hair, and then they recover and start working back. So you can see the key area here is the zone. There's stabs into the zone, but the market recovers. Stabs into the zone, the market recovers here. And once again, we get just above the zone here. Everything looks like okay, and then it can't hang on, and then we slide right back in the zone. What you're seeing here with the zones are, as the market falls back into the zone, the market, it's kind of like a person going up a hill. They're trying to go up the hill, and they're trying hard. I mean, they're coming from way back here, and they're climbing, and they're climbing. They kind of get up over the hill, and they kind of pull back. They get up over the hill, they pull back. They make one more time. It looks like, wow, he finally made it to the top of the hill. It looks like he's going to go much higher. He slips, and then the momentum just drags the market down. Because you basically went 1, 2, look, strike 1. Strike 2, strike 3, strike 3, strike 3 strikes out, you're out, and you can see the momentum just ticking. You see what I'm saying? So you see how the market pulls back, and then the people just finally give up, and the momentum drags the market down. As you come back up, where do they run out of gas? Coming right into the zone, the top of the zone. They don't even make it to the top of the zone, but you know that coming up against this area, they're really going to have a tough time. And so we come back down to test, and then it's just a matter of what's going to happen. And so last Friday, when we got the news that with Trump, you saw well, not with Trump, but with Hillary Clinton with the email server and the concerns that Trump could win, then you saw the market really sell off. It tried to come back, sold off. Tried to come back. It's like it's the same thing. The strike 1, strike 2, strike 3 area here. You see what I'm saying? Strike 1, strike 2, strike 3. And then we just slide, and we lose the momentum. When you scrunch it up here, it looks more evident. Then you say, oh, yeah, I can see that. When it's not as much, it seems like, well, I don't know, it's hard to tell what the market wants to do. Well, you can clearly see it here as they try to get above this zone here, and then they just can't do it, and they lose the momentum. Well, it's basically the same thing here, is that when the email service questions came out, we saw the big dip. and the market tries to come back. It tries to get, and at this point, I thought the market was kind of sold out. But I said, hey, it has to hold above. I was telling the guys in the chat room. I said it's got to hold above 2100 for the first half hour, and it didn't. It just started because look. If you look down here, I thought, okay, it looks like it's sold out. And I usually don't use trend lines that much, rarely ever. But you can see here, it looks like it's kind of sold out. It's holding here, and here's 2235. I go, it's got to hold 2100 for the first half hour. And initially it looked like that, and then it got below 2100, and that's it. Once they lose that level, then people were basically getting the hell out of Dodge at that point. If you look at a trend line, you could look here, it becoming like this. So once they lost that, people just basically threw in the towel and just started gaining momentum. I would have thought it would have stopped right around here, around this 2100. I would have thought there would have been a dip, maybe like to 98, 96, and then we pop up and they probably. But you can see here how the market respects these levels. As it comes down here, where do they run out of gas? 775. Well, where did you come up with 775? That's been the last two reactionary points. You see here, here. I keep telling y'all how the market never forgets the levels. You see what I'm saying? It's not about trend lines or whatever. It's about horizontal levels. People don't forget the trend, the levels. So you can see reactionary low, 775. I remember Delhi called this one. He called it very well. He had this rally back up, and where did they find support again? October 13th, 775. So as they come down here, we break class at, where do they run out of gas? 775. It looks like they might have made it to 8 or 8 1/4, but you see now the market slides back down. On the way back, everybody goes, oh, I remember that 775. I'm taking the other side. And then we see another dip. My take is that we're really well overdone here. This 8150 is a very key level. Come back here. There's 8150. You see right here? And this is 75. So we've got a nice little zone between 2075 to 2090. You see here? Could we break lower? Yeah, but there's some, you see there's a lot of good volume here between 2090 to 2075. You see? And 2082 is 161% of the range. So this is really good volume here. Could we dip lower? Yeah, but I think it's well overdone here. I think that what the market could do today, someone's asking me, I think that we could potentially push down here the 75, but I think that you could start to see the market just working back higher, steadily higher as the day goes on, and maybe we'd get up here to the upper 80s. Maybe, I'm just saying, we'll have to see. I'm no soothsayer, so I don't try and act like, oh, I know this is exactly where it's going to turn. Look, as I said, there's a bearish overhang in the markets, but I think any dip down here, I don't think you're going to see any real follow-through on the downside. So 2081.5, I showed you, really 75 to 90 is a very good area. 2181.5 is 50% of, or a little lower than 50% of this range here, 75 to 90 and a quarter, and 82 is 161% from this area here, 2150 to the 2108. So I think here, can the market dip a little bit below? Yeah, sure. But I don't think you're going to get any real follow-through. I could probably see the market try to work a little bit higher, maybe even take out these highs. If that scenario plays out, I don't know what's going to happen immediately. Obviously, if we got a horrible number and we saw these updated polls and Trump was running away, well, that's going to override everything. I'm just saying is, how would, in this scenario, where everything's all things being equal, the jobs report comes in pretty steady overall. Let's say it's 193. Everything looks okay overall. Then you could see a dip to new lows here, and then you can see a steady progression higher. I don't think he's going to go gangbusters at all. Obviously, if Clinton wins the presidency, then obviously the market's going to take off like crazy. And I'm just saying, for perspective, yes, the polls are tighter, but when you look at the Electoral College, she's leading, and he has to run the table. It's not saying that he can't. Anything's a possibility. And he certainly has the momentum at his back right now. But I'm just saying, and then the market's basically voting that. It's time for a break, so we will be back. Okay, everybody, welcome back. And we're going to go and take a look at the gold market. Yesterday I was talking about this, the key 1289, and we've talked about this on the way up, and this is where they found support. And I actually had talked to some guys actually in the chat room. As we got down here, we had some very key support here. You see right here at 86.70. I thought the market would stop. I mean, originally I thought he'll stop here at 94. It's 93.80. But as you see, the wheels came off the caboose and continue to come off. And I told you, you know, in the heat of battle, you know, technical levels, the market's going to overshoot these technical levels. So we talked about 89 being key. As it got down here, I tweeted out this chart into the chat room and said, you know, if you're still short, I would just be getting out now. We already even exceeded 1289. And this is right where they found support here, just 86.70. And then if you look at it on a bigger scope, on the 2-hour chart, then you can see the significance of 1289. We've already gone over this before, but we've gone, you know, way back here. You'll see 1289 here. Not going to go over that again, but this 1289 was just huge. And you saw a monster rally on the way back up. And some scalped it against the 0150 initially, and then started to pull back to things like $2.50. I mean, we saw other movements in here. And then we talked about shorting it again at 4:30. But as the day got later, I told people, hey, look, if you're going to short at 4:30 now, you're going to have to count on holding it into Asia. And so we hung around here. And someone asked me also, hey, I want to take on that trade, and what will be the upside? And I said, well, it shouldn't get above 580. That was what I told the gentleman. It shouldn't get above 580, but you're going to have to give it a little bit extra leeway, you know, above 6, you know, but it shouldn't get above 580. And that's actually where they ran out of gas, at 580. But Sihan hung around here, and I wouldn't have been short at this point because of the big ranges and with NFP. You know, I mean, I'm just saying, not the NFP so much. I just think the market's being held hostage, like I said, with this Trump overhang. But we did go and see a very nice sell-off, and usually on on NFP day, I'll sleep in a little bit, an extra hour, because I know generally the markets are dead, which they've been in the FX market. But we did see a pretty nice pullback, and the market's come back into this range that I mentioned to the gentleman, which is basically from 150 to 430. We were talking with the guys at this time here, this in the morning, when I was saying, hey, look, this 180s, that's it. I plus that chart. We're talking about getting shorter to 150. We saw a nice pullback. You saw that at $3, more than $3. You see that? And then it came back up. So that's what I'm saying. I really like gold because it trades so well technically, and you've got fantastic liquidity. Like I said, I used to like to trade crude oil. I think crude oil is it just doesn't even trade well anymore. You know what I mean? It used to be able to trade like the way gold trades, you know what I mean? And, you know, where we move to levels, we get above them, those levels of support, we lose them, then they become resistant. You see how, look, the market broke above here, we talk about this is in Asia, and then we come down here and there's support at 180. As we lose to 180, look what becomes resistance now, 180. And then 180 is a battle zone here. When we come up here, 180 support. As we lose it, we start to move lower again. So that's what I'm saying is real good technical action, not the crap that you see in crude oil. Like I said, I've tried to go back to crude oil. It's just nothing there. I mean, good luck for those that want to trade it. Maybe eventually it'll come back, but I'll tell you what, it hasn't been trading well really in a very, very long time. Well, Brian was saying that was about the music. Yeah, that's Duncan Sheik. So we're going to move into FX. I mean, at this point, the market's just held hostage. That's it. I mean, I think we'll be lower in euro overall, and I think, barring some, anything can happen. But I mean, I don't think. Let me see. But we'll have to see what happens here. I don't think anything's changed. Someone's asked me about the cable. I don't think anything's changed. I mean, this is it right here, and that's why I have it in a bigger text. 24.94 being the 38%, and the market got to lose. I think it's 24.95, and we did see a nice pullback. You know, about 50 pips lower, and now the market's trying to work back. And Michael Houston made a good point, is that maybe they're trying to fill the gap for the flash crash. So once you got below 26, I think it dipped to, I could be wrong. When I saw it like on a 1 minute chart, I mean, it lost this 26.02, but I think it went to like 87 or 82, like 25.87 or 25.82. And it held there for a brief moment, and then the wheels fell off the caboose. My thoughts is that any moves up to just above 25.50 would be quickly faded. But we'll have to see. Like I said, this is on a 15-minute chart, but I think it was on a 1 minute chart when the market really came apart. You see here how they dipped? So let's take a look at that level. That's 26.01. So they had dipped down 26.01, then they tried to rally up, and then the wheels fell off. I'm not going to bother looking at it 1 minute, but I think there was but maybe this was it, but I think it had got to 25.82 or something if you look at it on a 1 minute. Then it really fell apart. I think I'd have a hard time thinking that they could get up to that level. I think that any moves up to 25.50 would, like it might get above 50 and maybe rally up to, let's say, 67 or something like that. And then quickly, I think it'll be paired back in. We'll have to see. Obviously, if there's a disastrous NFP, that would spark this selling. I mean, spark this buying. But I think here's my take. If you're long cable and you say I'm riding, then I would definitely have my limits already in place, like to get out of it, like 25.58, 25.65, or something like that. So that if we were to get a terrible NFP and it hits a stop and they zoom up, then it would take you out. Because I think that they'll fade that coming in. I mean, for today, like I said, I'm just more about just looking at the overall picture. Because, as I said, I think that we have that overhang in the market. And I think we have that overhang in the market. And it's just going to be hard for the market to break out of anything. I mean, I think the only way the market you see some pretty big action is if the NFP truly disappoints. Then you could see some big action, but I don't think it's going to disappoint. I could be wrong. I don't have a real good take. I usually have a pretty good take on what I think is going to happen, whether it does or doesn't. But I'm saying it's usually I didn't last month, and I don't this month. Although I would think that it would outperform the 175. I could see it get like above 200. Not a whole lot, but I could see it get above 200. Could be wrong, but I think we could see something like, if I had to throw a number out there, I'll say something like 215 or something like that, right around there. I think we could come in over, and that may allow the dollar to really take off initially, and then you want to cover into it. You don't want to be chasing the dollar. If we get a number like I said, I think we get something like 212 or something that just overperform, not way overboard, but then you'll see the dollar come in. I mean, you'll see the dollar rally, but I definitely wouldn't chase it because I think there'll be people to use that as a use that rally as an area to go in and get out. We're going to the dollar switch because Jack was talking about that, and this market fell way more than I thought it would have. I mean, I thought it was going to fall, but I didn't think it was going to fall this far. And we talked about it having support here at the bottom of the zone. We're talking about the same thing earlier. We were talking about zones, and 97.15 to 98.92. And that's almost 200 pips, almost. And you can see here where they came down to the 61%. And that's what I just try and do is I look at the levels, and then I look for fibs for confluence. Generally, unless I think the price structure is set up a certain way, generally I won't trade just directly off of a fib. Well, there's a fib, and I'll take it to the side. No, I'll try and tie it in with, is there a support already? And so you can see there's support here, this zone here, and it comes into the fib, and you can see that that was a good area to step in and buy. Actually, this is a little bit, should be like about like there. So 97.04. So you can see that was a good area if you were short to cover into. I wouldn't just say willy-nilly, I'm just going to buy it or sell it based on a fib. No, I'm looking like, because if you see this market and it's massively oversold all the way down, and we're coming into a zone here, not only a level, but a zone, and then you have the fib as a confluence, that's a pretty good area then. If you were trying to scalp it on the long side or cover short, you can see that's held up really well. And we'll just have to see how it goes and plays out. I mean, like I said, even if we get a good NFP, it's the Trump thing is such an overhang that it's too much for the market, you know what I mean, to overcome that. So if you're trying to see something big that's going to happen, barring a very weak NFP, I just don't see it happening. I think that if we got something like I said, I'm going to go with, I'll tell you what, I'll go with 212. I'm going to say 212. I think it'll overperform. I don't think it'll be overboard. I mean, it might only come in the 190s. I think it's better than the 175, but I'm going to go with 212. So let's say if we get 212, you're going to see the dollar rally, but it's not going to change anything. I mean, it solidifies the thought process that they're going to raise in December, provided we don't have a Trump presidency. That's it. Because like I said, a Trump presidency, a Trump win is going to send the markets screaming lower. I mean, make no bones about it. It's going to send the market screaming lower. It's going to send the dollar screaming lower. I'm saying the market, S&P is going to scream lower. Gold is going to scream higher. That's when you see the markets under that much pressure. And it's even going to impact it globally because of his trade policies. Although if he were to win, he'd probably say they're going to look at other stuff that may not be so much. But the market's not going to believe that. I mean, he's been saying all along how he was going to be. So why is he going to change all of a sudden? But he might try and say some stuff to calm the market. Oh, we're going to look at that. I mean, we're going to try and get good trade deals, but we'll be even tempered on how we do that. That might quell the selling, but it's not like the market's going to come back. You see what I'm saying? So that's the overhang, and that's the risk that everybody's looking at. And that's why you're not going to see this big reaction, even if the jobs numbers were to come in good. Well, I don't think that's correct. Luke Lucas says, in this mood, the market may take good news for bad news. That doesn't even make any sense. I mean, I know what you're talking about. Sometimes the market will do that. No, that doesn't make any sense. How can a good jobs NFP be a bad number? That's not a bad number. The overhang, it's gonna solidify the thought of a rate hike. And people would say, well, then that would be probably bad in the longer run. No, because most people think it's going to be a one and done for a while, at least till June. But even if we get a good number, the overhang is still there with Trump. So then that would continue to weigh on the market.